So, how are you all? Good. So, yes.
For these job applications, you want
Megan.
You want us to send in? Do you want like the email confirmation? Is that what?
You can show me whatever you want. I just need a list. I trust you. I need a list of the names of the companies and positions. But if it's easier, you can forward me the email confirmations too.
Okay. Or just send a one giant email screenshot.
Yeah. So today is Globus discussion day. And I was going to run it like this. I've got a couple of things that I wanted to illustrate to you guys using the prior class so that no team in here has their stuff up on the screen. And then I can answer any questions that you guys have in particular. And then I thought I would knock off a little early and help some of the teams that are in the like lower positions, one-on-one.
What's the help requirement? What's the lowest position for help requirement?
I will give help in reverse order, and if you want to stick around, I'll get to as many teams as I can.
All right, cool.
Make sense?
Yeah.
I'll even help the first place team if they want to stay, but they're going to have to stay and twiddle their thumbs until the end of the class session. Okay, so any general questions right now before I give a couple illustrations? Okay, let me dive in on a couple things I wanted to show you guys. Okay, so I'm going to go in to, folks, hello, thank you. I'm going to go into last winter's class. There's a couple of interesting things to illustrate here. So the last place, actually in general, all the teams in this class did really well. There was only 3 by the end of the game that were below 100% of investor expectations. But the 3 that were below, the bottom 2 were pretty far below. So I'm going to go in reverse order and show some of the problems that these teams were having. So the H team was in last place in this particular game. And usually what I recommend doing if you're in last place and things really aren't working is to radically change your product position. So that sometimes works, but sometimes it doesn't. And I want to show you how in this case it doesn't work because there's another problem. So first thing I always recommend doing, otherwise you have unrealistically rosy numbers, is always make sure before you do anything else to go in and click these projections and usually move them up one notch. Every once in a while the game goes a different direction, but in general, every year that the game goes on, prices get lower, PQ rating gets higher, and marketing gets more competitive. So in general, you want to change those toggles before you do anything else. Otherwise, you're going to think that you're doing really well when really you're not. So if you notice, it was 13% positive on return on investment. Now that I've changed the toggles, it's 14% negative. So some of the teams that are not doing as well, make sure to change those toggles, and then at least you're not surprised. So the changes you're making are actually going to put you in a good position once you've made them. So usually my next recommendation would be to go to the competitive intelligence report and look at the quarterly snapshot of where everybody is. So if you look here, Group H has a 3-star camera in entry level and a 3-star camera in multi-featured, 3.5-star in multi-featured. So they've got really high quality camera in both markets, but you'll notice there's 1, 2, 3, 4 other teams that also have a level 3. So they're kind of getting lost in the mix of all the high quality cameras in entry level. But there's one team at 2.5 stars, 1, 2, 3 at 2, and only one at 1.5 stars, and there's nobody at 1. So my recommendation was going to be, especially because also in multi-featured, there's only one team that has a low-rated camera. I was going to suggest for this team to go low and reposition their product features to the lowest in the game. So a lot of times that'll help a lot, but I want to show you what happens in this case. So notice, to start out with, I don't know how often you guys look at this information, but at the bottom of the product design page, it tells you what your cost per camera is. It calculates it automatically. So right now, their cost per camera is $143 for entry level and $298 for multi-featured. Watch what happens when I change all the features. So you'll notice it's interesting. We got it down to about 130, but I moved the number of models down to 1. That actually made the price go up by $10. So even though you would think that having less models is less, actually in this case less models is more. And we've moved the price down from 144 to 121. However, that's still 121 for a 1-star camera is not going to work. Like, you have to sell a 1-star camera at something like 105, 110 maximum. So this team is going to lose money on every camera they sell because they can't get the price down low enough. And the problem, if you look at the components of the cost here, $54 in labor costs. So part of the problem this team is having, if you go down to compensation, well, first of all, let's make sure that everything is correct. So let's change multi-featured to be in the 1-star category as well. Bless you. You're welcome. We'll move everything down to the lowest quality possible. And again, if we move it down to 1 model, that actually adds money. So 5 models is actually a 1/2 star. So there's more models, but there's a lower quality, and the price is down to $214. So we'll leave the models high, but everything else low. And then you'll notice here $67 per unit is labor, $68 per unit is labor for multi-featured. So like almost half the cost of the camera is labor right now. It's way too high. So if we go in and make sure, first of all, that we're selling as many cameras as we can. So this team had a good quality camera before, so there's actually a lot of stores that want more of the camera. It's their problem is not the quality of the camera. Their problem is something else, and it's actually labor. You'll see when we get down to the compensation, they have about 3 times as many workers as they need. And over the course of the game, they forgot to lay off workers. Yes, Stephanie.
Sorry, I know you're talking about something else, but what is that red thing?
The red thing basically means that warranty claims are going to be really high, and that's because we lowered the quality of the camera. So we need to move the technical support numbers up if we want to avoid warranty claims. Make sense? So, but in order to know how many workers we need to make sure that we fix all the other numbers first. Okay? So you'll notice if I don't change anything else and we go down to compensation and labor, they need 69 workers. They've got 320. So 70, 32. That means that for every 4 workers, 3 of them are sitting around with nothing to do. But they still have to pay salaries for all those workers. So that's the main problem this company is having, is that they just have way too many workers. So we're going to have to lay off workers. The problem is you have to pay compensation. You have to pay severance pay for them. So that's equal to 1/2 of their annual salary. So even if we lay the workers off, the company's not going to get better until the next year after, because we still have to pay those severance costs. But in order to know how many workers we need to make sure to max out all of the production, change the prices, change the marketing to make sure that we have the right mix, and then we'll go down and set the workers. So you'll also notice here that they tried to fix their labor cost problem, but they did it the wrong way. You'll notice here they put in minus 10% on. They're cutting salaries by 10%. They're almost 30% below the industry average. So basically, they have a bunch of people sitting around who don't like their jobs and have nothing to do and get paid less than people at other companies. But instead of laying those people off, they're cutting the salaries. What they actually need to do is raise the salaries for the people that remain and cut all the people that don't have a job to do. But we'll get back to that in a little while. If we go back to marketing and continue, we got to take advantage of the fact that there's so many retailers that want the camera. So even though we're changing the quality of the camera, the orders remain. So we can max those out before we do anything else. So we go in, change all those numbers to be as high as possible. You'll notice here, even though we haven't laid anybody off yet, we're already up into positive territory again. Even though it started out as a negative 14%, we're now up to 9% return on equity, even though we changed the toggles to be more competitive. And we're not done making changes yet. So now, remember we said that Stephanie asked why is that red there? And it's because we changed the quality of the camera, so we're going to have a lot of warranty claims. We need to bring technical support way up. So let's look at what the technical support numbers are for other teams that have a 1-star quality camera. So 1-star quality here is very low, actually. Group A is getting away with not very much because they have a higher PQ rating in entry level. 1.5 stars here, 2.5 here, 900. And Group G, which has a low quality camera but not a 1, is spending 1,000 on tech support. So if you'll notice, this team is only spending 250 to 500. It's way too low. So let's move all those numbers up to 1,000 and see what happens. Bless you. So we've still got high warranty costs. That may be because the warranty period is actually too long. So if we change the warranty period, we leave that at 90 days and we change the rest of the warranty periods to 90 days, you'll notice finally, Stephanie, there's no more red. So we'll keep the warranty period low, but now we got to keep making changes. So we have a really low priced camera now. The price of the camera is going to speak for itself, so we don't need that much advertising anymore. So let's see what the lowest advertising number is from the competitors at this moment. So advertising 100, 120, 110. So it looks like if we bring our advertising down around 100, that's going to be the lowest in the game. So go back up here. Oops. To marketing. Oops, not price. Advertising. 100, 100, 100, 100. Okay, so now advertising is much lower, and you'll notice we gained about 20 or 30 cents on earnings per share, and we're up above 15% for return on equity now. And we haven't even laid the workers off yet. So as soon as we do that, it's going to get even better. However, we have an abysmal image rating because our camera is so low, so we're going to have to fix that in the future. But at least we've got the earnings per even if your image rating is low, that's only 1 out of 5 things that you get a rating on. Your return on equity, your earnings per share, and your stock price are all related to how much money you're making. So it's much more, you have to fix the profit numbers first, and then you can fix the image numbers. If you keep the image rating high, but your profit numbers are low, you're going to be proud that you have a high quality camera, and you're going to be in last place in the game. So now we need to change the pricing and the promotions because we moved our camera way down. So let's see what is the lowest. We can't be any more than $101 per camera. So you notice here, since we changed our warranty period, our warranty costs went down a lot. Our warranty costs went down, and thus our cost for producing the camera went down too. So now we just need to. We got to sell at least 105, because if we sell lower than 101.11 for entry level, we're going to lose money. But let's see what the prices are of our competitors. What's the lowest price in the game right now? 141, 118, 115. So 115. 105. Company I is selling at 105, and that's the 1.5 star quality camera. So let's do 105, and then we're going to just match their discounts. One for 2 weeks at 15%. So go back here to marketing. One for 2 weeks at 15%, and this is going to be 105. You'll notice here, I'm not sure if you guys saw, but now that I changed the prices to be the right level, the image rating went up from 47 to 62. One of the reasons the image rating was so low is because people were like, what the hell, the camera sucks and it costs like twice as much as it should. So it's not just what you're doing for corporate citizenship that helps your image rating. It's also the quality of the camera, the pricing, the technical support, everything else factors into that as well. So now we've got these prices right, and the warranties right, and the promotions right. Now let's check on what we should price the multi-featured camera at. So, oh look, and we're going to make a big profit because we changed our discounts and stuff. We changed the warranty, so now our production costs are all the way down to 66. So let's see if we can get away with the price that we have right now. We might even lower it more. But now 143 is the lowest we can go for multi-featured. So back to marketing. Let's see, and let's go back to the competitive intelligence report and see what's the lowest price right now for multi-featured. So 377, 350. Looks like 352 is the lowest price. So why don't we sell at like 299? Because we've got like a big profit on multi-featured anyway, and we can totally undercut the market there. So if we go back to marketing, make this $299. Now that cut our profits down a lot because we have all that extra money that we're not making anymore, but we haven't. The demand's going to go way up, and we haven't changed our production numbers yet. So wait to see what that is. Now on promotions, what are the promotions that everybody's offering for that price? So if we go back to the quarterly snapshot again, The 352 is 2 promotions for 2 weeks at 11%. So if we match that, that took our numbers down again, but we still haven't maxed out our production. So now it looks like everything's pretty good on marketing decisions. Now let's go down and fix our production numbers. See, as soon as we fix those, see how much everything's gone up, and we haven't fixed multi-featured yet either. So see, there's almost double the demand now that we changed the price. So once we fix those, looking great. We're up to 36% return on equity and $5 a share. That's probably going to be the best scores in the game now. Now, part of the problem, and I say to Group B because you're in last place right now, the scores in the game are cumulative. So if you do better this year, it's going to maybe move you up from last to next to last. And then the next year you move up more, the next year you move up more, because you're being dragged down by previous years. It's an average of how you did each year. So it's going to take a little while to get out of the bottom, but we've got time yet before the end of the game. So,
Other question?
yes,
On the
Anish.
snapshot, it doesn't show the right PQ rating for some reason. Like we were 3-star last week too.
Yep.
And then it still shows 2.5 on the quarterly snapshot. I don't know if you went over that before.
I didn't, but I can explain briefly why that is. The PQ rating changes based on what all the other teams did. So if everybody improved the quality of their camera because they invested in research and development, then your camera was, compared to the prior year when you're making the decision entries, it was a 3. But then after everybody else made their changes in the game runs, it's actually only a 2.5 compared to everybody else.
Oh, okay, so you want to use the quarterly snapshot PQ rating versus the one that's on your...
Well, the quarterly snapshot rating is what happened after the game ran last time. So if you increased your PQ rating when you make new decisions, it's not going to show up on the quarterly snapshot until the year later.
Well, the thing is, because I haven't made any changes, and it still shows 3 on there, but 2.5 on the quarterly snapshot.
I believe that's because if you continue to invest what you're investing in R&D, and the other teams don't increase theirs again, then you'll be at a 3 the next year.
Oh.
Does that make sense? Okay. So we're almost ready for compensation and labor. So now, wow. I thought we needed to lay people off, but check it out. Now we actually need more than we've got. Because we've made all those changes, we dropped the price, we moved to a new position. So I thought we were going to have to lay people off, but now that we changed everything, we would have ended up laying off 200 people, and now everybody that's there has something to do. However, we're still paying the workers way too little, 28% below the industry average. So everybody, we have a bunch of workers, but they're not happy. We want happy workers because happy workers are more productive. So let's change this from -10 all the way up to +10. We're still 17% below the industry average, so let's max out all of the bonuses too. And you'll notice we did need 360 workers. Since we improved the salary, people are more productive. So now we only need 298, and we haven't finished yet maxing out the bonuses. And we'll move up the fringe benefits too. So now we only need 279 workers rather than 360. So we almost have 100 workers less because we're paying them more. So now we do need to lay off some workers, and it's about 41. Oh, so we're going to put minus 41 workers here. And now we need to hire 11 more here. And 293 here because of the holidays. Oh, we can't hire enough. 283. So, 80. My goodness. So, we have made so many changes. We have made so many changes that the capacity of our factory is no longer sufficient for the production. So, even if we hired, we can't hire more than 80 employees because we don't have any space for them in the warehouse. We'll have to build a new warehouse, and the game does that automatically, but you have to wait 1 year in order to be able to hire more employees because it takes time to build a new factory. So we'll hire as many as we can and then lay them off again because we don't need them here. But now we got to make sure to max out that overtime because here you'll see units outsourced 319. There's no way around it. We're going to end up outsourcing units, but at least we don't have to outsource all of them. So we'll max out all those numbers. Now look at this. 38% return on equity. Our image rating's up above 70 because of all the changes. The only thing that's not great is credit rating, but that's the only thing we haven't fixed yet either. So corporate citizenship, since the image rating looks good, I wouldn't bother to change anything here right now. And then finally, for finance and cash flow, here's the problem. We're almost maxed out on our lines of credit. We use so much money to make all those changes in the factory that we need to pay down some debt. But the nice thing is that we only have 9,100, actually it's in millions, so we have 9,126,000 shares outstanding. So we can issue more shares. If we issue shares, then we get more cash and we can pay down our debt. So let's try issuing 1,000 shares of stock and see what happens. So that gives us, see here on our ending cash balance, we have a bunch extra cash now we can use to pay down our credit rating. So now we're already up at a B instead of a B minus. And we got more that we can pay still. 12,000 here and 45,000 here. That gets us up to a B plus. So check it out. Our credit rating's B plus. Image rating is above the industry. We've got $5 in earnings per share and 34% return on investment because we changed all the numbers to be in a better position in the game. But you can't just change one thing. If you change one thing and not the rest of the things, then it doesn't work. Like you'll notice when we first started out, our cost for the camera was $144 still, because we still had to fix all of those warranty problems and the marketing costs and all that. So now that we finally did that, we're at a B plus credit rating. Everything looks great, and if this game were actually real, I would click save and move forward. Does that make sense to everybody? Okay, it's 1:30 right now. I'm going to knock off at this point from my lecture and start by helping Group B, and then just move through the groups after that. So you guys are welcome to work on whatever you want to work on. If you're comfortable and you don't feel like your group needs any advice or any help, you're welcome to go, and we'll see each other next Tuesday. If you do want help for your group, I'm going to go in reverse order, so I'm going to help Group B first, and then who's after that? What's that? You're next to last? Okay, so then I'll help you guys next. So does anybody have your laptop with you? Okay, then I'm going to turn off the screen. Come over here.
Listen, how are you doing?
I'm good.
I've sent you an email about the recommendation letter.
Yeah.
When are we going?
Hopefully I can do it this weekend. If not, then next week. It's going to be later this month, but hopefully I can do it within the next week. Okay? Cool. Okay, no problem. Okay, let me turn off the recording.